What's good, guys? Welcome back to another video. The scenarios that we mapped out yesterday ended up playing out to perfection. Essentially, we got a 1 hourly close basically above this block right here, and once that happened, like, we managed to catch a trade. In this case, it was 2.5 hour, like exactly boom, boom. Like, all of this was called publicly on Twitter. So that's also the reason why I asked you guys to follow me on Twitter, because yesterday was one of those days where I wasn't super certain as to what was going to happen. I did know which, kind of zone that it would be very likely to have a reaction from, but like, as to what kind of reaction that was, no clue. Hence why I asked you guys to follow me on Twitter, and I got multiple comments that, you guys ended up making money right there. So 2R, thanks for the setup. And hopefully today we're going to make another win, but I think the price action today is going to be so much more clear compared to yesterday, and I'm going to get into it. By the way, if you're new here at this channel, just understand that you're probably in the right place, because we tend to be right more often than we're wrong. So far, our public record is 97 out of 122 calls that we've made here on YouTube. So yeah, without any further ado, let's just dive right into it. So yesterday we finally got a strong, kind of move, even though yesterday still closed bearish. But overall, like, at least in terms of the 1 hourly chart, the beautiful thing is that this previous order block that I mentioned, like, at the very least, you want to close above this order block right here before you even consider any sort of a long. So far, it has gotten broken through. Not only that, but price seems to be, putting in bullish order flow, in the sense that this is a bullish order block. Price breaks up above it, respects the bullish order block. That's step one in a change in order flow. Right after you respect this, boom, you make a new high, and then boom, you form another bullish order block, which price currently has went up again, respected the bullish order block, and now you're forming a new high. Now, there are only realistically two ways that this plays out. The first of which is that price is indeed bullish, and today we are going to look for bullishness, and we're just going to start trading towards the upside, which I'm going to get into that scenario in a bit. But the second scenario is that this is in fact a market maker sell model, in the sense that this is a smart money reversal. You got your first impulse, second impulse, third impulse towards the upside, towards some kind of higher time frame liquidity level. Once you sweep that out, you may go for a reversal. Now, as to which one is more likely at the moment, this is the critical point. Like, it's hard to say, because, like, let me just break it down to you and, like, give you all of the facts, because, like, the reality of this week so far is that we have filled higher time frame key levels, in the sense that this is a weekly order block, and so far you have filled it in, and so far you have given quite a nice bounce. However, because this week has not closed bullish yet, we are, at least from the weekly perspective, we are not ready to just jump right into longs right from this get-go. And, like, a similar lesson can be learned from last week, because this is a weekly fair value gap, right? This blue box right here. And just because the weekly fair value gap is filled does not give us the indication, or, like, does not give us the trigger to just go long right ahead. Because if we did that, we would have been stopped out. Case in point, what happened this week. And so just because this has been filled in doesn't mean that we are immediately going to go up. It's just that, at least from the weekly chart, the way you want to think about this is that we have a higher likelihood of bouncing from here than we are to just keep going lower. But this, bearishness is still very much a possibility. It's just that right now, based on this key level, the odds are stacked in our favor if we're looking for bullishness. So that's the way that I'm thinking about it at the moment. Like, if I do take any longs, I still want to be a little bit cautious, especially because, like, from the daily chart as well, this is a change in state of delivery right here. The fact that price closed underneath $112,500 on Monday signifies a daily change in state of delivery, which means that this entire block right here is going to be, bearish resistance until proven otherwise. In fact, don't even think about this one. Right here is a bearish order block that price is currently trading into. Now, lower time frame wise, we have already started shifting, but just understand that in terms of the higher time frame, we are still bearish, and that's what gives me kind of like hesitation to just be like, okay, we're going to go long right away, because the truth is, we need to take into account market conditions. Out of, like, all of these days right here, like, there are maybe like 20 to 30 days that were just super clear in terms of direction, and for the most part, when those days are present, we do call it here on the channel. When things are a little bit less clear, a lot of what this was, I do say it as it is. The fact is, not every day is a trading day, not every day is a beautiful day. All right, case in point, we've had sunny days here in Bali for like the last 10 days. Today, it's been cloudy the whole day, right? It's just taking into account. And you're not going to treat a cloudy day the same way you would treat a sunny day, right? On a sunny day, yeah, you go out, you go to the beach, you go to the cafes or whatever, you ride your bikes, you do your fun stuff. But then when it's cloudy and when, there are some rain clouds, take it easy. You take into consideration that it may potentially rain, and today might not be the best day to head to the beach. Similarly, this is how you treat market conditions. Like I literally just pulled that out of nowhere. But like the markets do in fact work in a very similar fashion, in the sense that when the day is good, when the market conditions are good, you are aggressive, right? You play the market because those market conditions favors aggressive just trading. You do what you're supposed to on days where the market conditions good. On days where the market conditions a little bit, you're not quite sure if it's going to go up or down, you play it a little bit more cautiously. Doesn't mean not to trade at all. Just like the lesson that I shared with you guys yesterday, which is, we may not know if price is going to go up or down. So we're going to just wait for price to get into the zone that we're looking for, observe the reaction, observe how price action is playing out. And then depending on what happens, we make a move. And that's why the trade yesterday occurred that late, right? Even though I made the video at 5 a.m., I took the trade and closed at 10 a.m. There's a lot of waiting in between for price to just do its thing, like to just do its setup until there is a clear condition. In this case, the break above, you're coming back into the order block, right? We get in. Timing matches, the price action matches, and then boom, target out that high. And that is a beautiful clean trade that, like, even though we waited 5 hours for the trade, the actual trade itself played out in about half an hour, right? We managed to get a 2.5 hour in just half an hour. And that's just the beauty of, like, on a day like yesterday, sure, we may have been able to catch some kind of an earlier entry if we got in earlier, but then we also run the risk of like price just straight up, just going to the other side. It's up to you whether or not you want to, stomach that risk. Personally, I would rather go for the higher probability move rather than the, hit or miss kind of move. Just on the note of yesterday's trade, I also want to just discuss real quick another lesson that is going to help you guys out a lot. So if you took a look at what happened yesterday, initially we got the move up to, that profit target that we set right there. But then after that, even though there is another swing high back here, that could be a reasonable target, given the fact that if you stop right here, these are going to become relatively equal highs. Now, even though that is a valid target, like the trade yesterday, like it was a good thing that I closed it out here. And you'll notice that this target only got hit today. And I think that's a very important lesson that you guys need to learn, which is context. Like, what is your goal when you are taking certain trades? For me, at least on this channel, what I'm doing primarily is intraday trading. I'm not necessarily calling swing trades on this channel, which means that whatever trades that I do take, I plan to open and close them within the same day. And most of the time, it tends to get open and closed within the same session. Even more of the time, it tends to be open and closed within this span of like a couple of hours, usually less than 1 hour. Case in point, yesterday's trade closed within half an hour. It goes to context, right? We're doing intraday trading here because if we were stubborn and we refused to close the trade in search of like more profits, we would have actually been stopped out, because this was our entry, this was our stop loss, and price actually came back to just stop out anyone that did not take profit on this move here, stop them out before actually going back towards the target. Okay, so just to give you an example of how this would play out, if you were a day trader or some kind of a short-term trader, most likely you would be executing from the 1 hourly chart or maybe the 15-minute chart. And in that case, you would definitely be utilizing this order block right here. You'd most likely place a stop loss underneath the order block. And in this case, you would be safe because of the context that you're trading in, right? This makes sense from the 1 hourly chart. But the moment you start trading from the 5-minute chart, which let me break it down for you, the entry that we took yesterday, if you remember, was based off of this order block from 5-minute. Now, the beautiful thing about, whatever time frame or like whatever style of trading that you're doing, in my case, this is the 5-minute chart. Going down to the 5-minute chart allows me to get a very narrow entry in the sense that my entry to my stop loss is just a difference of like $300. And for Bitcoin, that's tiny. What that allows me to do is to catch a very high probability and quick move within the context of the same day itself. Hence why this is called intraday trading. Hence why I say I do intraday trading, right? It's intraday. And like when I set my stop loss and entry from the context of the 5-minute chart, and if I set my target in the context of the 1 hourly chart, in this case, like I can't really see that target unless I zoom out a lot on the 5-minute chart, right? The point that I'm trying to share here is like, if you're going to trade from the 5-minute chart, or if you're going to trade from the 1 hourly, it doesn't matter. If you're going to trade from the daily chart, you want to set your targets in a way that fits the context of the trade that you're taking. 5-minute chart, I'm going to set 5-minute targets. If it's a 1 hourly trade, I'm going to set 1 hourly targets. Okay? A lot of the times people come to me and they're like, oh, what is the best time frame to trade at? The reality is, like, they all work. It just depends on what time frame that fits you, or like the time frame that you're looking for. For me, I would rather open and close my trades within the same day. I couldn't be bothered leaving them overnight. And in this case, I choose intraday trading. But for you, maybe you're not a fan of like just making super quick decisions and, opening and closing within the same day. That might be a bit too intense for you. Perfectly fine, right? Do a little bit more of like swing trading or like day trading. right? Or short-term trading. As long as you remember that whatever time frame that you're looking for, don't be like looking at guys on Twitter being, oh, they managed to catch an entry here, they put the stop loss here, and then they target here. And you're like, whoa, that is so achievable, right? The reality is they've likely been doing this much longer than you. And they are also most likely very clear on like what risk to reward or like what kind of profit taking strategy that fits their exact system. They're not trading the same system as you are. So for you, just like the lesson here, take context into account, take goal into account, trading from the 5-minute chart, set 5-minute target, right? There's a reason why this is called intraday. You do not take an intraday entry to take profit using like a swing trade target, okay? Doing that is just a recipe for disaster. And you're going to end up running into the situation like yesterday where, you know, if you didn't take profit, price would actually have came back to stop you out before price actually moves back in the direction that you already knew that it was going in. But that aside, let's go back into today's video. And so far, I've already kind of mapped out the market conditions to expect for today. Now, on a 1 hourly chart though, I think there is one, like the play for today is going to be pretty straightforward. I think at least this is worth the bet, because right now there is, I can basically like, again, there's two scenarios. One is what I think may happen in the sense of a market maker sell model where you're going to get a reversal from this point onwards. That is what I think could happen. But then the market is also showing that you are in bullish order flow at the moment. And so in cases like this, even though there is a risk that we may be stopped out here, I'm still going to look for a long trade because that is what the chart at the moment is pointing towards. And so like I accept the risk, but also I accept the fact that this is still a valid idea, and hence why I'm going to call this. Just to break down the backstory of the trade that I'm about to call, this is the 1 hourly bearish order block that I wanted to see getting traded through on the 1 hourly chart before I can comfortably say that, okay, we're in a safer situation now where we can look for longs. That has happened so far in today's Asia session, like literally 6 hours ago. Now that this has happened, we have the opportunity to flip this previous resistance into potential support. So in the case that we retrace back into the zone right here, starting from $112,400 or like $112,500, we can look for price to actually hold this level and to just treat this as support and then go up to a higher level, in which case I am targeting right here at 113,600. That's going to be my intraday target, okay? Now, don't get me wrong, in a swing trading perspective or a day trading or a short-term trading perspective, the target's going to be a new all-time high. It's just for today, my target's very simple. It's just right here because these are relatively for highs that's not yet been taken out. Hence, these are very weak highs, which means it kind of almost acts like a magnet for price to head towards. The way that we're going to do this is from the 1 hourly chart, because we are bullish on the 1 hourly chart. We are looking for bullish PDOAs to take advantage of. The first one's going to be right here. It just so happens that this bullish order block right here aligns with the previous bearish order block that we completely blown through. And so in the event that price retraces into this zone, which I've already marked out, like 112,500 to about like 112, let's say $112,000. In the event that price retraces into this area, you're going to want to look for some kind of bullish reaction. And the keyword here is look for a bullish reaction. It doesn't mean that just because I say that, oh, price is going to bounce from here, you just set a limit here, set a stop loss here and place your target there. That could work. But again, goes back to the context of what we're trying to do here. If you are intraday trading like myself, then you're going to want to wait for price to get into this level and then hop onto the 5-minute chart and look for a like appropriate reaction. And that appropriate reaction is going to be a shift in bullish order flow. So just to give you an idea, this right now so far is bullish order flow. But I want you to picture that if price were to come into this level or this level here, it would have done something like this, where in this leg here, it would be in bearish order flow. What you want to look for is for price to actually shift the order flow, right? Essentially respecting bullish PDOAs and disrespecting bearish PDOAs. Once that happens, that is going to be your trigger to entry. That, just like yesterday, we did not enter solely because like this order block was blown through or whatever. I just saw indication that there was bullish order flow. Not only was all of these, order blocks respected, but price also traded through this level right here. And so that's the exact same situation you want to look for today. The only thing that determines whether or not you win or make money with these trades that I'm calling or not is dependent on your ability to identify the CISD and to also wait until that CISD happens. So again, the trigger is going to be once you enter into either one of these blocks, starting at 112,650 down to say like $112,000, we're going to want to look for price to actually shift into bullish order flow. Once it happens, entry here, stop here, target 2R or target at 113,600. Now, just to break down a little bit about the timing as to when you can expect this to happen, you can see that today has news at 8:30 a.m. This is when you get USD news. And so you want to expect that kind of like retracement to happen anywhere between the hours between now until like 7:30. And then once you start getting that move, like let's say at 8 a.m. or 8:30, once this happens, boom, price is just going to very likely shoot towards the other side, pretty straightforward. Now, there's also another kind of scenario that could happen, even though this is the zone that I'm looking for. We may or may not retrace all the way back here. So in the event that price actually just shoots up from here, this becomes your new order block, like bullish order block, and you can actually just momentum trade all the way to here. Although I have to admit, if this happens, I'm probably not going to be jumping into this trade unless I have a further target in mind, because like this is not going to give you the best risk to reward, right? At most, this is going to be a 1 hour trade. And so let's just zoom out a little bit, see if there is any like other potential targets. This, don't get me wrong, is still a very valid target, like at 115,000. I just don't know if it will get hit today. And that's my only concern. So if you do jump into this one, like just target 2R, like just an arbitrary number, which is, you know, most of the trip. So if you do get into this trade, like instead of looking for like super long targets, what I would personally do is just target 2R. All of my trades that I call here on this channel are always 2R. If I don't set a target specifically, then just assume that it's always going to be 2R, because the truth is, for most beginner traders, heck, for most traders, including myself, 2R is all I need to make a really sustainable living from trading. But most likely, like more likely than not, probably going to retrace back into the zone right here, and then we are going to head towards the other direction. So definitely look out for that. The only like kind of invalidation scenario that could happen for today is that once you come into the zone, you actually blow through the fair value gap and you do not get that bullish CISD, in which case it's pretty likely that the scenario B is going to be inflated in the sense that it's going to be a market maker sell model. As for whether or not I will be trading that, like no, like my call today officially is going to be towards the bullish side. If it ends up being a market maker sell model, what I would really love to see to confirm that is a break underneath 111,200. If we get a 1 hourly close underneath this level, this would fully validate the market maker sell model. And it is not too late at that point to just wait for a retrace deck and to ride the market lower. Again, this is just a scenario that I'm considering, but there is a big difference between what I think may happen and what the market is actually showing me right now. And as a trader, it is our job to trade what the market is showing us, not what we want to see. I say this all the time, and hopefully I have inspired you just kind of like as living proof to do that as well. And by the way, if you enjoy the way that I trade, or if you enjoy the way that I think about the market, and if you would like to learn this for yourself, feel free to click the first link in the description box below to sign up to bootcamp. This is where I'll work with you one-on-one personally to teach you everything that I know and get you profitable within 60 days. Outside of that, let's see you tomorrow's video. Bye-bye.